Is the US quietly resetting money? And how would this affect you if they are? Right now, the United States is carrying roughly $38 trillion in federal debt. Annual interest costs are approaching $1 trillion. And in late 2025, the Federal Reserve made a subtle but important move. It stopped shrinking its balance sheet. These are the actual current conditions. When debt reaches this scale and central banks stop withdrawing liquidity, the same pattern shows up again and again. Not collapse, not default, adjustment. And historically, those adjustments don't arrive with announcements. They arrive through small structural changes that compound over time. And that's why the word reset keeps appearing. Not because money is replaced overnight, but because the structure around money begins to change. But often, these structural changes are completely misunderstood. So in this video, we're not going to predict a crash. We're not going to predict the complete reset of the US dollar, but we're also not going to dismiss that concern either. This is about taking the major reset claims, from the most reasonable to the most extreme, and testing them one by one. Every claim is going to get the same filter. We're going to look at what actually changes, what real evidence exists, and we're going to look at who benefits if these claims become true. Some of these claims will absolutely hold up, and they are valid, but some of them, quite often the ones that get the most attention, won't survive the most basic of critical thinking. And one of them is so absolutely ridiculous, but has a real origin story, a real government source that started a real conspiracy theory that has many Americans living in fear. In this video, we're discussing the most mild to the most wild claims that are being circulated about the reset of the dollar. This is truth or scare. We're going to start with a claim that is absolutely true, but is getting wildly blown out of proportion. But before we get into that, let's create a framework around all of this. We'll start with what you'll understand and what you'll be able to explain when people come at you with the most crazy of dollar reset conspiracy theories. First thing we're going to understand is what changed in US monetary policy and why it matters. Then you're going to understand what real soft reset mechanisms look like in real economies, not the crazy stuff that is floating around the internet. And you'll also understand the foundation, the real foundation of the $37 trillion crypto reset story that is absolutely mind-blowing and at the same time a complete fallacy, even though the source for it was real. So first we need to understand what a reset means. This is a dial. It's not an on and off switch. It's not a complete turning off of the dollar or a complete abandonment of the US dollar as the world reserve currency. In fact, in history, there's been no single reserve currency that has collapsed and been abandoned completely overnight. The impact is usually gradual, just like it was when the US dollar took over from the British pound. It took decades for the British pound to no longer be the primary world reserve currency. And as we all know, it still exists today. It didn't just self-destruct overnight. And there's a lot of good reasons for that. But the primary one is that when a reserve currency shifts, it's actually in everyone's best interest, whether enemy or friend, for that shift to be slow and gradual. So when we see a lot of these big claims with respect to the US dollar being abandoned and the imminent destruction of the US dollar, well, we need to start looking at these through a critical lens. And we need to start testing these ideas against history and what's happened before, and whether what is being suggested is even in the realm of possibility. So what we're going to do is we're going to look at 6 of these claims, and we are going to grade them. And at the end, we'll understand whether or not they're truth, whether they need context, or whether they're flat out scare tactics. In order for something to be truth, it needs a clear mechanism and strong evidence. Things that need context are partly true, but often overstated or misread. And the scare tactics, well, those are the ones that have weak evidence, missing mechanism, or a complete scale mismatch. But regardless, they are obviously the most scary, and they're the ones that end up keeping people awake at night, even though there's really no reason to fear them. And we're going to look at all of this through 4 filters. The mechanism, so what exactly changes and through what channels. The scale, which is does the math work at the claimed magnitude. The evidence, what primary data would confirm or falsify it. And the incentives, who would choose this outcome and why. Who benefits from the scary story that is highly unlikely. So let's jump into claim number 1, and that's that the Fed shifted course. This is absolutely true. The central question around this claim is the Fed done draining liquidity? In other words, are they going to start printing money again? Which I'll get to a little bit later on. But the primary concern here is the Fed's balance sheet. Is it growing? Is it shrinking? When it's shrinking, that typically means that there's less money going into the economy. And as we all know, when it's expanding, that means money is being printed. And this, in a lot of cases, but not always, causes inflation. The fear and the consequence of the shift is that it's going to change financial conditions. The fear is that inflation rears its ugly head again, and things get a lot worse for a lot of people due to higher prices. And recently the Fed announced that it was going to shift from having a balance sheet runoff. So some people took this as the Fed was going to start printing money again. Many even suggested that this was going to be a shift to quantitative easing, which is what happens when the Fed prints money, at least in a very basic sense. But really what happened here is the Fed shifted from letting the balance sheet shrink to a more neutral position, letting it plateau and maintain itself. But it doesn't mean that they're actively trying to get it out of the system either. What was basically said was that we're going to stop the ship. What people heard was that they were turning it around and doing a complete 180. And fear comes from a lack of understanding. So here's what really happened. The Fed simply decided to avoid funding market volatility. In other words, they were looking for more balance than the craziness that has happened in the last 5 years with rates going up and then coming down substantially. And this was largely a stabilization move. It wasn't a restrictive move, nor was it a stimulus move. It was simply a, we're going to try to make things balanced move. So what's the verdict of claim 1? Yes, this was truth. There is a documented balance sheet policy shift occurring, but it's not proof by itself of a new round of stimulus. So after round 1, here's what we've got. Got 1 confirmed truth with 5 claims remaining. So let's move on to claim number 2. Money printing is back. Quantitative easing is back. That's the claim. We all know how scary this can be, especially when it comes to prices. But before I get into the details, let's talk first about what this all means. Quantitative tightening is when the balance sheet shrinks. Holding steady is when the balance sheet remains roughly the same size. Quantitative easing is the stimulus mechanism, because in order to do this, they print money to buy treasuries from the government so that the government has the funds to push it into the economy. That is the mechanism that the central bank uses when interest rates can't go any lower and they still want to put money into the economy. So when people say the government is printing money, they're typically referring to quantitative easing, but this is an imprecise label, and it can hide the intent and the scale of what they're actually doing. So with this understanding, we start to understand what they're doing. They are purchasing treasuries when they're doing quantitative easing, but purchases of treasuries are almost always happening. This can mean different things. It can mean that there is reserve management happening. And in reserve management, this is just smoothing out the functioning and the implementation of money going into the economy from the Federal Reserve so that the government can do the things it needs to do in order to keep the economy running efficiently. In the case of quantitative easing, it can also mean stimulus intent. And this is exactly what happened in 2008 and 2020 in order to ease the pain of both the financial crisis and the pandemic. During the pandemic, it was largely because interest rates hit zero, they couldn't go any lower, so the government simply started to purchase treasuries from the government in order to get more money into the economy than what would otherwise be pumped back into it by lowering interest rates and lowering borrowing costs. So purchasing treasuries is a normal thing that happens, but that same instrument can have different goals during different times and different types of economies. So when you hear that the Fed has stopped quantitative tightening, that doesn't necessarily mean that they've started quantitative easing, but what it may mean is that they're going to start purchasing more treasuries in order to keep the balance sheet level. You see, the exact same instrument, the purchase of those treasuries, can have different goals during different economic times. What changes is the scale and the persistence of the buying, which changes based on what the Fed's goals are and what they're trying to accomplish. So, claim 2? Well, it's pretty clear here. This needs context. Ending quantitative tightening doesn't mean quantitative easing starts. It doesn't mean the ship does a 180. Suggesting that just because the Fed has stopped quantitative tightening is the same thing as quantitative easing being back can be completely misleading without understanding the scale and the intent. So yes, the Fed stopped quantitative tightening, and that implies that there may be a little bit of money printing, but it doesn't mean that they're firing up the money printers like they did in 2020 and 2021. So this one needs context. Our scoreboard is now 1 truth, 1 needs context. We've got 4 claims remaining. And the story behind that $37 trillion crypto reset, That one's going to blow your mind. So let's move on to claim number 3. The $37 trillion or the $38 trillion debt means that the US has to do a reset. They're going to have no other choice. So here's the setup on this one. The number, the dollar value of the debt is absolutely real. But the conclusions that people draw from this, they vary wildly. And not only that, the definition of reset, it varies wildly as well. Does this mean a complete de-dollarization or a complete replacement of the currency like what happened in many Latin American countries? Or is it something less nefarious than that? Perhaps it's a policy shift or inflation dilution. So with this one, it's important to separate the measurement from the narrative. Because one thing you need to understand about that $37 trillion is that while it's a scary number, and the debt to GDP ratio is a scary number, the more important number is the cost to service the debt, which when you compare to the debt to GDP ratio that seems like it is the worst in history, isn't actually anywhere close to being the worst it's ever been. So in other words, yeah, the debt got way bigger, but the cost to carry it isn't as big as what the historical highest debt servicing to GDP has been. So think of this one like a mortgage payment. In the 1950s, houses were way cheaper, but about 35% of incomes were going towards housing costs. Then in 2025, housing prices are substantial, but it's still about 35% of incomes are going to housing costs. Then compare that to 2008, when prices weren't as high, but 70 to 80% of people's incomes were going to housing prices. And that is a real stat. That's what we're talking about here. Is the stability price the amount of debt? Or is it whether or not it's realistic for us to pay it based on the amount of income that we have? So let's talk about what the debt numbers mean. The total gross debt includes public debt and intergovernmental holdings. Now, many people believe that a large portion of the debt is owned by other countries, but it's not. The large portion of the debt in the United States is held by the US government or Americans. And a large percentage of that is in social programs, which is down the road going to be a benefit for all Americans anyways. That isn't meant to dismiss this, but it's important to understand that nobody's coming to foreclose on the US and take their land. But different definitions here create a headline mismatch. Because quite honestly, many people think of the government debt as though it is personal debt, and it's the same mechanism, but it's not. Personal debt, without a doubt, has to be repaid at some point. But government debt, well, it's like giving yourself a mortgage and having to pay it back to yourself. You're not going to foreclose on yourself. All you have to do is make sure that you can make the payments to yourself. The other big piece of confusion here is that rounding creates a lot of confusion. I mean, in 2025, we went from 36 to 37 to 38. Now, we're not at $38 trillion yet, but we crossed 37.5, which means it's getting rounded up. And even though the debt is growing fast, it makes it seem like the debt is growing way faster than it actually is. Because when you hear 36, then 37, then 38 in the same year, it starts to feel a little bit scary, doesn't it? But what's important about this claim isn't the debt itself. It's the concept of the reset and what it means. Because yes, higher interest rates, it increases the government's sensitivity to interest rates. When interest rates go up, the cost to service the debt goes up, which means there's less money to be put into the economy. And it creates this whole snowball effect that I'm going to talk about in a future video. But the important point to note is that higher debt increases vulnerability to growth slowdowns. So if the economy stops booming, or if GDP growth slows down, well, at the same time, we still have these massive interest payments, it means there's less money effectively to pump back into the economy and minimize the pain. So just like an individual, when you have more debt, you're more vulnerable to things like higher interest rates and losing a portion of your income. Well, the same is true for the government. And where this really shows up is when it narrows fiscal flexibility. So in other words, when it reduces the ability for the government to inject money into the economy. And this creates policy trade-offs. Where do we put the money when there isn't enough there to do the things that are needed? Do we put it into investing in tech companies? Do we put it into infrastructure? Or do we put it into onshoring manufacturing jobs, which, by the way, is crazy and not going to work? I made a video on that recently. It talks about how manufacturing jobs are going away, not because they've been offshored, but primarily because of automation. There's also some potential risks down the road with respect to AI. But again, that's for another video. So claim number 3 is this. $37 trillion or $38 trillion in debt means that there is going to be a reset. Well, yes, there is truth to this. Debt levels are historically large and they do create real government restraints. But just to be clear here, the number alone does not prove that there's going to be a sudden currency event. So on our scoreboard, you now have 2 truths, 1 needs context, and 3 claims remaining. Claim number 4 dives deeper into that $37 or $38 trillion problem, and that's that debt guarantees a reset event soon. Now, this is a stronger claim than the debt is just large. It introduces timing certainty. This is where you see headlines like the debt is about to be reset, the government is about to reset your money, or Russia claims the US is going to reset its dollar with a $37 trillion crypto reset. Yeah, we're getting to that one. This claim, it often comes across as a guarantee, and that's scary. But with this one, we really have to look at the adjustment mechanisms, because reset, when just heard on its own, sounds really scary and has different meanings to different people. But for most people, it means bad things are coming. So many headlines on this, they imply that something crazy is going to happen. Something like what happened in Venezuela, where they just kept creating new currencies and canceling out the old ones. But there's really only a few different adjustment paths that you really have to worry about, or that you can expect. The first is fiscal adjustment. So that means increasing taxes in order to start reducing the debt loads or reduce spending. Now, those are the 2 mechanisms that the government itself has in order to reduce the debt. Tax you more, spend less. It's the exact same mechanism that we all have when it comes to our personal debt. The second adjustment path, and this was largely what happened after World War II when debt to GDP ratios were similar to what they are now, is a growth surprise. After World War II, this was manufacturing. This is where something happens in the economy where we grow faster than we're spending, and this outpaces the debt. Because to be clear here, what happened after World War II wasn't that the US government made massive changes that allowed them to reduce the debt. What happened was that the debt, it kind of self-corrected because manufacturing started booming and it outpaced the growth of the debt. Now, could this be something that happens today? Yeah, possibly, especially with everything that's happening with AI, but there's no guarantee. The third adjustment path is just quiet dilution, or maybe not so quiet dilution, depending on how you look at this. And that's simply by having more inflation. And I made a video about this in the past about how the US was going to inflate its way out of debt. Well, yes, having a lot of inflation actually does reduce the burden of the debt, assuming that the debt isn't growing faster than the rate of inflation. But obviously that creates major issues for everyday people and ultimately is not the best way to do it. More than likely, what'll happen is it won't be any one of these 3 things, but it will be a combination of the 3. Typically, when a government starts to reduce its debt to GDP ratio, it's because all 3 of these things are happening to some degree simultaneously. And this is what's otherwise known as a soft reset. Essentially, you have purchasing power erosion over time because of inflation, returns as a result lag inflation, and this turns into asset repricing as the money dial is slowly shifted. And this gradual pain, and you can argue that perhaps we're feeling it right now, feels invisible until it isn't. Until something changes. But at the end of the day, reset doesn't really mean that the government is going to do something drastic. It's not going to be a sudden event. It means that there needs to be structural changes so that the economy can start outgrowing the debt and we can return to lower levels of spending relative to the amount of money that's being produced in the economy. So the verdict on claim 4 is, again, it needs context. A total reset being a sudden event, that's a scare tactic. A necessary reset of the structural mechanisms, well, that's definitely true. And there is a significant need for long-run adjustments so that the pressure is relieved. But a near-term, sudden, immediate reset event, well, that idea is not supported, and it also has significant repercussions, not only for the US, but for countries all over the world, and of course, as well as everyone who lives all over the world. A sudden reset would effectively create another big financial crisis, and obviously nobody's interested in that. So we now have 2 truths, 2 needs context. Now let's get into the scares. So let's talk about the real scary claim here. The dollar is collapsing soon, and it's inevitable. This one is wild. Not as wild as the next one, but it is absolutely wild that this is showing up in the headlines and that people actually believe it. So this claim stems largely from one specific piece of data. That is the amount of US currency that is held in foreign reserves, which has been declining over the last couple decades, once being as high as 70 to 80%, and now being down to around 50%. And the insinuation here is that other countries are no longer confident in the US dollar and they're holding less of it. And yeah, that's partially true, but we need to separate gradual diversification away from the US dollar from a complete abandonment of the dollar, because that isn't what's happening. Yes, we have some countries that are becoming more enemies than friends of the US that are trying to diversify out of the US dollar so that they can't have the things that have happened to countries like Iran and Russia happen to them. The US has, I would say arguably, but it's really not that arguable, they've started to use their reserve currency status as a weapon. Maybe not of mass destruction, but of mass pain. So it makes sense that countries, especially ones that maybe aren't the best partners of the US, are starting to hold less US dollars. However, those countries like the BRICS nations, when combined, have significantly smaller economies than the allies of the US who are continuing to hold US dollars. So there is effectively going to be a floor at some point when it comes to the amount of US dollars that are held in foreign reserves, because American allies aren't changing the percentage of US dollars that they're holding, because they aren't at risk of things like sanctions. Countries like Iran, countries like Russia, countries like China are in fact diversifying out of the US dollar. And so is India, but not necessarily because they're finding themselves to be an enemy of the US, but because India sees itself not so much as an ally of Russia and China or an ally of the US, but as a country who wants to be allies with everyone. But in order to trade with those other countries, yeah, they're going to hold less US dollars because they're starting to buy goods and services and commodities from those other countries, which are choosing not to transact on them in US dollars anymore. So that makes sense. But what's important to note about the reserve data is that the dollar remains dominant, and reserve shifts tend to be slow and path dependent. When the media says that only 52% of foreign reserves are held in US dollars now, it kind of implies that that happened in the last 2 or 3 years. But it's literally taken decades for it to go from 80 to 70 to 50%. But not only that, it doesn't necessarily mean that the US dollar is less reliable. Of course, that is arguable. But even things like exchange rates can play a role in that share number, even though effectively it hasn't changed as much as the numbers would indicate. So diversification here, it doesn't necessarily mean abandonment. And no, China hasn't stopped accepting US dollars because they'd be crazy to. They'll always have some percentage of their reserves in US currency as long as Americans are still buying Chinese goods, because it's unavoidable. So for the US dollar to rapidly collapse, there would need to be a few things in place. A credible alternative with deep, liquid, safe assets at scale. Yeah, China's buying more gold, but they're not buying enough to create a credible asset that challenges the US dollar. And the BRICS nations, yeah, they could create their own currency, but the economies of those nations, even though they seem like they are large, pale in comparison to the US and its allies. In fact, all of them combined pale in comparison to the size of the US economy. And don't forget that the European Union, they tried this like way back 20 or 30 years ago to be an alternative to the dollar, and we all know how that ended up. So even a group of countries like the European Union, who developed the euro to challenge the dollar, they realized quickly that while the idea was attractive, it wasn't something that was actually viable. Then you've got to convince all of the countries and all the institutions to absorb the transition cost. Switching from the US dollar to trading in some other currency is not an easy thing. It's not easy for governments, it's not easy for companies, and the resistance to doing this, if it ever happens, is going to be real. That's why it took several decades to switch from the British pound to the US dollar. It's because the system, by its very nature, has resistance to changing the currency that everyone transacts in. Then last but not least, you need persistent loss of confidence in the US markets and governance. Now, yes, there are periods, a couple years here, a couple years there, where countries lose their confidence in the US. But that doesn't change that the liquidity of US markets and the stability of the government, even as crazy as it may seem right now, is still substantially more stable than most other countries, and definitely more stable than the other big players. So for the dollar to collapse, it would not only take coordination from not only the countries that are enemies of the US, but also the countries that are allies. And in the same way that the global economy coordinated to move from the British pound to the US dollar, you would need the same sort of coordination. And you'd need everybody to agree that it makes sense to move to a different currency that is no longer backed by one single stable, let's call it organization or government. Let's just consider the euro for a second. It's pretty clear that a group of countries that have different interests have a hard time creating stability around a shared currency. It creates significant problems for each individual country when they lose the ability to have their own central bank and control their own economies. And obviously, when countries don't agree, you end up with something like Brexit, where the biggest one just leaves. So the very idea of multiple countries having a currency creates a vulnerability in and of itself. So when it comes to the US dollar collapsing soon, well, this one's a scare. And it's not going to happen. Are there going to be times where it struggles? Probably. Are there going to be times where things get good? Absolutely. Could there be a prolonged period of time where confidence in the US dollar starts to wane and there is a global shift to a different currency? Yeah, absolutely. But just like in the case of the British pound to the US dollar, this is something that will take decades, not weeks or months or even years. So the honest framing around this one is that there's a long time horizon when it comes to any sort of collapse of the US dollar. This isn't a countdown. The US isn't Russia. It isn't Venezuela. It isn't any of the countries that have had currency resets, or I guess more precisely collapses. It is the single biggest economy in the world, largely supports the fact that the US dollar is safe from a sudden collapse. And that's supported further by the fact that all countries have a vested interest in making sure that the currency of the biggest economy in the world doesn't collapse. So before we move on to our last one, here's the scoreboard. We've got 2 truths, 2 need context, and 1 scare. So let's move on to the craziest of all claims. The US has a $37 trillion crypto reset plan. So this one does in fact have an origin story, a government origin story, and it's a wild one. In September of 2025, at what many people cite as the Eastern Economic Forum in Vladivostok, I don't know, I'm not good at saying these names. I'm not even going to try it again. A Russian senior advisor named Anton Kobiakov, I think I got that one close to right, made the claim that the US would push others into a crypto cloud and rewrite the rules. He suggested that the US would reset its $37 trillion in debt by using cryptocurrency. And this one made headlines, but those headlines quickly morphed into something that it absolutely was not. In a lot of cases, the fact that this originated from the US's biggest adversary was completely ignored. And big supporters of Bitcoin and cryptocurrency started citing this as a possible plan in order to push cryptocurrencies and get the prices to rise even higher. The claim was that the US would convert part of its debt into dollar stablecoins. Then it would take those stablecoins and devalue them and start over from scratch. The idea is actually interesting. Is it plausible? Probably not. But in a way, it was kind of genius. And much like an evil genius in a movie, typically their genius plans are also absolutely ridiculous. But that doesn't change the fact that many people believe that this was a real and viable plan that the US was contemplating, which they absolutely are not. But the Russian official was basically saying that the US could commit economic warfare by solving their domestic problems and transferring the expense to others. But there was no operational details of how this would happen. This was a vague theory. It was like suggesting that China was going to put nukes on the moon without any sort of evidence that they could A, even do that, and B, had any desire whatsoever to. But even then, for some reason, people seemed to believe this one and started spreading this crazy conspiracy theory. And the problem happens when people just take these theories in without actually stress testing themselves. It's like the whole world, when it comes to finances, basically forgot that they have the ability to critically think. And the biggest question here is what would have to be true for this to happen? Well, first, you'd have to have the legal and the operational pathways to do it. Somebody would have to authorize it, everybody would have to agree, and then laws would have to be written that would allow this ridiculous thing to happen. And we all know that when governments try to pass laws, it creates opposition, and that opposition would have real reasons why this isn't okay. That opposition might be people from the US, it might also be trading partners. And there would be significant pressure for this not to happen if anybody in the US government was actually stupid enough to suggest it. And just keep in mind here that the large percentage of US national debt is held by and for Americans, so the people who would actually suffer from this are in fact US citizens. So the biggest opposition would absolutely 100% come from home. So Russia was kind of suggesting that this would be how the US would screw other countries, but really in order to do this, the largest group of people that would be hurt would be Americans. And there's no doubt that that would cause civil unrest, uprisings, and yeah, stuff that just isn't going to be the hill that any politician dies on. Well, I mean that figuratively, not literally. Then they need some hypothetical vehicle to absorb the trillions. So if you use a stable coin and then you devalue it, well, now a whole bunch of money just disappears. I personally just can't even comprehend how you would do that, how you would find a vehicle that allows you to just make $37 trillion in money vanish. Yeah, there's some interesting theories out there on the internet, but none of them make any sense whatsoever. Then there would actually have to be the incentive to undermine the trust in the dollar. It's still the primary currency for trade. Why would you use the financial nuclear option in order to eliminate debt that, by the way, the US can pay for, even though it's creating a little bit of pain? And then last but not least, where's the evidence for this? Is there any visible policy actions, any documentation from the US government or the Treasury or the Fed to suggest that this is even being contemplated? Yeah, governments hide things all the time, but this is the type of thing that is pretty hard to hide. And quite honestly, nobody's going to try to hide it anyways because it's essentially impossible. So without a doubt, even though this claim comes from a real government source, albeit not from our government, and has created endless conspiracy theories that are being used to sell cryptocurrencies and all kinds of stuff, even gold, the reality is this one's a scare. It's the most scariest of them all, which means it gets the most attention, but it is in fact a complete and utter fallacy. Under critical thinking, the idea of this fails in every single way. There's no mechanism, the scale of it is absolutely insane, and there's no evidence to even suggest that the US actually even has a plan for this. And here's the most important point for this one, and really for all of them, and that's that a reset is usually a dial. It's something that happens gradually. It's not an on and off switch. So we end with a scoreboard. 2 needs context and 2 scares, but we end up with 1 massive win. And that's the key pattern here. Sometimes things that start as true stories often get stretched into wild and unjustified conclusions. And often those conclusions become very, very scary. But with respect to a dollar reset, do you have to worry about one? Yeah, you absolutely do. There is going to be a reset. But that reset means that there's going to be gradual changes. Often those gradual changes are going to have significant impacts for a short period of time. But there is no evidence to suggest that the dollar is going to collapse, that the US is going to reset its currency, or that the US Fed is going to turn around and start printing money again, even though the reality is they've stopped tightening in the way they were previously. So the real lesson here is that the primary skill needed when it comes to reading the news or watching videos on YouTube is you need to have the ability to think critically. And if you don't understand something, if it seems unbelievable, it's probably because it is. It doesn't change the fact that there is the outside possibility that the US dollar could collapse, but it does change how you should think about things. And I've made a whole series of videos about what could happen in different scenarios where the dollar collapses. YouTube and I think you'll like this one right here.